What's up, traders? Welcome back to another YouTube video. Today, I'm going to be teaching you a very simple strategy that I see happen again and again in the currency market. I'm going to talk about exactly how you can find these sort of setups, why they work so effectively, and why this is one of my favorite things to look at in markets. So stay tuned. Let's jump into the video right now. Hey traders, welcome back to the YouTube channel. If you don't already know me, my name is Nick. I share all sorts of Forex topic content here on YouTube. So if you're not already, make sure to subscribe to the channel down below and also give this video a thumbs up if you like this sort of kind of in-depth content. So with that said, let's talk about this concept. So today I'm going to be sharing a strategy. Now this strategy is mostly focused on price action. Okay, and what I'm going to be talking about in this strategy is a price action entry, exit, and kind of full trade start to finish concept for traders who are both kind of newer to trading or struggling to find consistency. I'm going to talk to you guys about one of my favorite setups that I like to look for in the market and why this setup is actually so powerful. Now, what we need to do in order to start out this concept is we need to understand something about the Forex market. When we're looking at the Forex market, we're talking about currencies, right? We're talking about things like the US dollar, right? And in this case, the yen, right? So dollar JPY. Now, what I'm going to be showing you is something that can be used on any time frame. For example, right now I've got the 4-hour chart pulled up, but really this is something that can be spotted on any time frame because it happens all the time. And that's what we're going to get into. So what we're looking for with this concept is basically we're going to be using, again, price action to find a particular setup that happens all the time. So when we talk about currencies though, we have something like the US dollar and the JPY or the Japanese yen, what we find is that in markets, what do we know about them? Do we know that they trend all the time? That's not the case, right? The market does not go like this, right? At least not usually and not for unlimited amounts of time. What the market actually does a lot of times is it is back and forth or it is trending one direction. Most of the time though, actually about 65–70% of the time, we are mostly back and forth. So when we have a market that is mostly back and forth here in the currency market, where we have when things get stretched to the upside, usually they start to come back. When things go to the downside, they start to come back. And that's not always, but it's a lot of the time. Most of the time, the market is not super trending. And that's why trend trading can be a difficult task. Well, in today's video, again, I'm going to be talking about a particular strategy that I like to look for that involves trading mostly ranges or trading mostly the reversal of trends that are starting. And what we're going to be looking for is not just necessarily shorting a trend, right? We don't necessarily just want to be shorting this market on the way up. That's not necessarily what this strategy is going to be about. And we're not going to be just buying just because the market is going down. What we're going to be doing with this concept is we are going to be looking for signs of a potential reversal and trading based off of those signs to give ourselves a higher probability of catching the reversal of a market, whether it is long or short. Another really cool thing about this strategy that I'm going to talk about is it doesn't matter where the market is going. It could be going up, it could be going down. We are going to be looking for signs that it's potentially going to change directions and looking to catch part of the reversal. So without further ado, let's talk about this concept. What is it exactly that I'm talking about? What are we looking at here? Well, let's notice something about this market. What do you see? Well, you see a market that is making a series of higher highs and higher lows. What does that mean? Well, if you're a newer trader, very simply, what that means is we have markets that are pushing higher and higher. And not only are they pushing higher on the top side, right, where you're making higher highs, right? You see how these highs are higher than the previous high, pretty obvious concept. When we have higher highs like this, that is one thing. And we also have higher lows, meaning that the price is pulling back, but buyers are stepping in and pushing that price bullish. So what is that telling us? That's telling us that there's a lot of demand in this market, right? So clearly buyers are in control of where the price is headed right now, which is up. So what we're going to be trying to do is we don't necessarily, with this particular strategy, we don't want to be shorting this market, not when the market is still strong. What we are going to look for is a key word here. We are going to look for weakness. And how are we going to spot weakness? Well, let's go back to our definition. We'll keep things very simple here. Our definition of strength was higher highs and higher lows. Higher highs, HH, and higher lows. So if that's our definition of strength to an uptrend, then what's our definition of weakness? Well, we can kind of reverse engineer this, and let's say we flip the script. What if we had lower highs and lower lows? Would this not, by our very own definition here, be the start or potential start of a different direction trend? Well, this, guys, is the kind of concept of a head and shoulders pattern. If you don't know what that means, give me a second here. I'll continue to explain. We are going to be talking about a head and shoulders pattern, and I know this is considered a basic concept, but sometimes it's the simplest stuff re-engineered and kind of brought back to the basics that can really be some of the most consistent stuff in Forex and in trading in general. Okay, so we've got that all cleared. The chart looks much cleaner now. But what we have here is we have, again, a market that is making a series of higher highs, higher lows. When that starts to shift, we usually see something pretty interesting happen. So again, higher low, higher low, higher low, higher high, higher highs, higher highs, higher highs. So what about here? What do you notice about price here? This is not necessarily a higher low. In fact, we've got some pretty good evidence to suggest that this is a lower low. You can see prices is forming lows here where we're showing a lot of demand. Price is moving up, and you could probably even make an argument that, take a look, we've got this kind of trend line to the upside, right? So price is making a move to the upside. Price is very bullish. And then we come in and we basically break down. We break down and we show some signs of potential reversal. Now, we want to be careful here. We don't want to be just, at least in my opinion here on this particular strategy, we don't want to be shorting this market just because it's made a lower low. I'm actually going to wait for something further, and I'm going to talk to you guys exactly about where the entrance point on a trade like this might be. So stick with me. So we've got this level. Let's identify this level here. Again, here is our higher highs, higher highs. What's right here? I'll give you a hint. LH means lower high. Price tried to rally again, right? Buyers tried to continue this uptrend, but they failed. And this is the big thing here. When this market fails to make higher highs and higher lows, that is where things get interesting. Because now we have the potential to look for signs of a bigger reversal. Because remember, when the market is back and forth all the time, right, for the most part, looking for signs of reversals could actually end up being a reversal, and there's some pretty good evidence that you could line up to try and find good setups, okay? So with that said, how could you trade this concept? Well, so now we've got our level here, right? So we've basically come up, we've formed this level here at the previous move. We made a nice move to the upside. We made a nice try, but then we failed and formed this lower high. Well, now you might be saying, well, we should just be shorting right here, right? Well, if you knew that this was going to be we're going to see a major downtrend, then of course you'd say, yeah, short right here, it'd be easy. But we don't know that. In the case, to be fair, we wouldn't know that this is the end of the trend at this moment. This is too soon to tell, because if you can imagine, if we're just trading right here, it still looks like it potentially is bullish, right? Well, in this case, what am I going to wait for? Well, we've highlighted this region right here for a reason, okay? This level is considered our neckline, okay? If we actually get a tool, there's a tool here on TradingView, which is really cool. You can go over here and let's see, head and shoulders, right? And it will give you, it'll help you create just this kind of pattern. So now you can visually see there's our head and shoulders pattern. Left shoulder right here, head at the top, right shoulder at the lower high. Then price breaks underneath what we would call the neckline. I'll put NL. At the neckline, we break underneath. Well, here is the setup, guys. Here's the trade that I really like on this sort of concept. Again, remember, we're looking for the reversal. So that means we're looking to go short, but only once price starts to show us evidence that there is a good chance that we continue. Remember, we have no guarantees in trading Forex. We only have probabilities. So where are we going to enter? How are we going to enter? Where's our stop? Where's our target? All of that information, what can we do with it? Well, let's get our short tool. Again, another really cool tool that TradingView provides us. And bam, this is our entry. on this strategy, the idea here is that as price retests the neckline after breaking, this is where we enter, okay? Price broke through the neckline to the downside. We saw a price break underneath that level, and then price starts to retrace. We make a move to the upside, and sure enough, we see price fall. So to some degree, this is kind of a break and retest combined with a head and shoulders technical pattern and potential technical reversal. Okay, so that's where we're entering, at least based on this strategy. Price breaks underneath the neckline. We retest this area. We're looking for the continuation or the start of a new trend. So we're looking for a trend to basically show evidence of weakness. Remember, let's recap. We're looking for a weakness in a trend, and we're looking to join, it's terrible handwriting, I'm sorry, a new trend. And that's exactly what this sort of entry does. We're looking for the retest. Now, where do we put our stops, right? Because it's important, in this case, how are we going to define our risk for this sort of concept? Well, we've got this right shoulder. I'm going to use that as my risk. I could place a stop right above the previous high. Stop above previous high. So when price comes up to this previous high and falls from there, if price starts to break back above it, then I'm just going to scratch the trade, just going to take a loss, no big deal, okay? Now you have some options here, and this is where things get interesting, okay? Because now we have a question of, well, where do we put our targets? So we've answered a few questions. We've got the entry, we've got the stop, which defines our risk. Now, where do we put the exit? And you have some options here. What do I mean by the options? Well, you can go for a strict something like a 2-to-1. That would give you something like this. That means that our risk is 1 time and our reward is 2. So if we have something like a risk of $50, we're potentially going to make $100. And if you get some good setups and you get good at finding these sort of scenarios, this could work out nicely. So you're making nice profits when things go well, and you're losing some profit when things go wrong. That is one way. Now I'm going to give you some more options for you to think about. Again, at the end of the day, I'm not telling you what you should do. I'm telling you what you should think about, right? So you should think about this concept and find which is most comfortable to you, because different people are going to be thinking different things are better, right? So if you spot a trend and you spot the potential reversal, you enter, right? Everybody's entry is going to be a little bit different than the other person's, right? People see charts differently. So you have to ask yourself, practice this, take a look at the concepts, go back test this concept and figure out what works for you. So now there's another choice that we have to make. Well, what if we want to target structure, right? So let's say we look for a significant area on the chart historically. Well, we've got this level here, which looks pretty interesting, right? Take a look back here. We can use our concepts that we've talked about all the time on this channel. Pivot moments like this, right, are significant. Historically, that is where supply meets demand and things pivot off of that. So you could make an argument that something like this, or maybe this level, is a decent target for your trade. So you could place your target at the recent structure. This gives you a 2.3-to-1. So again, you have to ask yourself, do I want to go strictly off of a risk to reward? Do I strictly want to go off of a pip-based target, right? Do I want to go for 100 pips, 200 pips, whatever, 50 pips, right? That's another thing, depending on your time frame as well. Remember, I mentioned this can be used on multiple time frames. It doesn't have to be the 4-hour chart, but I'm just giving you a demonstration. And then you have to ask yourself, well, what if I want to take 2 targets? This is finally the third option that I'm going to give you guys to think about, right? What if I want to basically have 2 targets? We could target halfway and take profit 2. So we have take profit 1 and take profit 2. That allows us to scale out of the trade. You could put this one at a 1-to-1, right? That's something to think about. I know a lot of people who love this concept. They put a target at 1-to-1, and then they put a secondary target at the 2-to-1 or at their second level. Or they even let the trade run, and that's a whole nother concept. So again, you have some options here to think about. How would you do this? Well, just so you know, there's a really easy way. You just take 2 positions at half size each. One put on the target here at the 1-to-1 level or wherever you see fit for that first target, and then the take profit 2. Okay, so that gives you a few exit criteria. See, we had to think about the exit more than we had to think about the stop. right? So the target was a little bit more to think about. And that's honestly how it should be, in my opinion. It's a little bit, your stop is certainly important, but it's also important to think about, your exit strategy on the good side as well. So something to kind of think about there. So again, this can be used on any time frame. It can be used on the 1 hour, the 30-minute, the 15-minute chart. It can be used on different charts. And this is where it's also going to come down to you doing a little bit of back testing. So I definitely encourage you, if you like this concept, if you like trading the head and shoulders pattern, it is a very simple structure to recognize. You don't have to be a genius to do it, right? You just basically look for higher lows, higher highs, right? That sort of thing. And then you basically look for these sorts of setups. So this concept is nothing super tricky. So the average person who's learning trading can certainly start to find these patterns, to find these setups, and to look for them and to build a strategy around them. But I highly encourage you guys, do not take these videos and just say, oh, I need, just tell me the simple solution that's always going to give me every single answer with no problem. Right? What I encourage you to do is take these videos that I'm sharing insight, I'm sharing ideas and concepts that I've learned through my years of trading. Do something with it, okay? Go take it and back test, okay? Go take it and back test these concepts. Go on the chart, spend the time, take the diligence to go practice this concept. Spot them for yourself. Share it with a friend, share the video with a friend and ask their opinion and learn and work through it with them, right? So back test this concept. Well, what else? Plan a trading plan. I guess make a trading plan, but you guys get the point. Make a trading plan. You guys would be surprised. In our business, we provide all sorts of different services for traders, and we are constantly amazed that there are so many people out there who do not have a simple trading plan written down. I would highly suggest whatever you stick to, or if you want to stick to something consistently, write it down physically on a piece of paper, put it on your desk. That will help you, at least it does for me, it'll help you remind yourself what the plan is and how to treat everything. So this is all just kind of based on this concept of head and shoulders. If you did enjoy this video, do me a big favor, please subscribe to the channel if you are not already. I know a lot of you guys that watch these videos are not subscribed, so I would really appreciate it if you join our community here on YouTube and give this video a thumbs up if it is helpful to you, and I will make sure to continue to make more content like this. Comment down below what you thought of this strategy, guys. Thank you very much for watching, and we will see you guys back next time.